strong numbers. What's your reaction here, Matt? We've been talking about it all morning.
I'm actually pretty positive with this. I thought they'd come in lower than expectations. I thought there'd be certain companies that did really well. But this is a nice surprise, especially after last month being down 0.3%. A lot of times they slow down their spending. And on chat here today, it seems like everybody's slowing down. I don't feel like I'm spending as much, but these numbers are good, and let's see if it can give the market a bit of a boost. I doubt it gives the market a boost because we're too hung up on Greece right now.
And Yuri, I want to bring you in on this because we're still digging through the numbers here, and what looks to be some more positive news as far as the consumer, the December retail sales number was revised up. It had been reported that sales fell 0.3% in December, but that number has been revised up to a drop of just 0.1%. So some pretty good news overall as far as the consumer coming back.
No, I agree with Matt entirely. It is good news. But overall, I'm not going to be impressed. I don't think this will have a large effect on the market. Like I said, I think Greece will be the most important driver for the market, at least for the next couple of weeks. And it's just a negative environment in terms of the potential for the consumer to save the economy here. Consumers are still strapped for credit. They don't have access, and credit continues to get reduced. And unemployment continues to rise. And I don't see an opportunity here for the consumer to bring the economy out of recession, and that's unfortunate because consumer activity usually makes up about 70% of GDP activity, and I think that number will continue to drop and probably trend towards somewhere around 55–60% for the next few years.
All right, well, let's bring in the economist in here. We've got Joseph Brusuelas joining us. Joseph, what's your reaction to these numbers? At first sight, they look much better than expected.
Well, they're much better, but I think what's driving it was an increase in the price of gasoline. So it's sales at gasoline stations that are largely behind the ex-auto increase. But inside the data, you should expect to see an increase in clothing sales, an increase in non-store retailers, that's e-commerce, because we saw some very aggressive discounting on the part of stores like Macy's, Bloomingdale's, and Nordstrom's post-holidays, and we saw last week those very strong chain store sales. So this is actually a good sign.
Let me give you some more numbers there on that note. It looks like January electronics and appliance sales were up 1.2%. They fell 3.5% in December. That goes in line with your point.
Exactly. No. And I mean, I like these numbers because one, that was my forecast. I was way above the consensus on this one, so I enjoyed it a lot. But two, look, we've got a recovery that right now is led by business and industrials. The consumer's going to lag a bit. We need to see that unemployment rate continue to fall. We need to see hiring start in the private sector, and we need to see an increase in wages. So this is a good number that's in line with the trend. If we can hold this trend, this is something we can build on.
And the fact that, go ahead, Matt.
I was just saying, ex-gasolina number was still up 0.5%, which is pretty strong. And saying here, the weakness came in home-related sectors, furniture and building, which we kind of known. And I have to go along here with the online stores, electronics, and clothing were the three areas that really led this rally. And this may be the whole fact of people looking for after Christmas holiday sales too. A lot of people redeeming gift cards, so that's a nice boom for me. And I think if you want to invest, if you're an investor out there, you invest online, Amazon, and some of the companies out there. That is where we saw retail sales increase in November, December, and remain strong here again in January.
A nice stock play on that. And Joseph, another number I want to point out, because this trend actually continues. Furniture and home furnishings sales dropping by 1.4%. So while we're seeing some other stronger numbers, this is an area that really struggled during the recession and looks like it's continuing in January.
This is one part of the report that's going to continue to be a drag on overall net sales throughout the year. Look, we're going to have further problems in the housing sector. I expect home prices to fall. It will really pick up later this year. And then bringing it back to today, this is a nice offset for the very difficult economic news we're seeing around the world. Chinese tapping on the monetary brakes, the euro economy stuck in the mud, and infighting in the EU over the bailout of Greece. So we'll see if this provides a little bit of positive support to markets here this morning before we get going.
On that note, thank you, Joseph. Matt, Yuri, thanks for reacting
so
well to all of that. We're watching the markets for you in reaction to this. We did see a little